Can you all hear me? And can you see whether you can see two screen? I'm sharing now at the moment. So just let me know whether you can see two screen and you can hear me. So can you give me a kind of a yes in chat? Everyone, can you hear me and can you see two screen that I'm sharing now? So we finished up to question number 18 and we'll be starting to do the rest of it. I hope and I believe that you have done this paper. So if you have done it, so you'll get the real benefit out of it. And in the meantime, I sent another tune that is pertaining to partnership. So I'll be doing 3 classes. Basically, this is my second class. And the next class, I'm planning to do a company accounting question. This is the most toughest and as well as the challenging question as far as your entire paper 2 is concerned. So with that, keep in mind. So the next Monday would be my last class, and Ali will be taking the management accounting area pertaining to this subject. Okay, that will be happening in the next financial year. Yeah. So we'll go through question number 18, basically the information to answer question number 19. Clear? The question is profit for the year. The question is profit for the year. So they're asking profit for the year, basically. So what is the formula? What's the format to derive cash generated from operations? So you have profit before tax. Just copy this along with me. Profit before tax. And then you do some sort of a working capital changes. You add, so you do depreciation, you add. And then you come up with the working capital changes. And then you take income tax paid and interest paid. And further you do add interest expense as well. So this is the format. This is the format to derive cash generated from operations. Okay. And the answer you got, it's called net cash generated from operations. So you should be very careful about these wordings because your examiner knows most of the students are struggling. So make sure you have a clear picture of cash flow statement. So cash generated from operations. And the final answer is net cash from cash generated or used from in operating activities. Okay. This is the structure here. Okay. So we'll take one by one. So interest expense is 250. So shall we put those values here? 250 interest expense. Increase in inventory. You say inventory. And since it's increase, it is minus, it's cash outflow, 200. And net cash generated from operations, the answer is 1,500. Increase in trade receivables, TR. Since it is increase in current assets, it's minus. And decrease in creditors. Creditors decrease, that also minus 300. And net cash used in investment activities is not relevant. Increase in cash and equivalent is not relevant. Increase in income tax payable. You cannot take that one as a working capital. I'll come to that later. Depreciation is 100. Depreciation is 100. And shall we open a small 2T accounts for income tax payable and interest payable? Shall we do? Just write it down, income tax payable. And interest payable. Okay, so here it's mentioned income tax expense for the year is 300. So debit P&L and credit is how much? 300. And interest expense now, oh, that is 250. It's a bit tricky one, okay? And it's further mentioned increase in interest payable. Increase in interest payable. So you put it, credit side is more. So you just put 50. Interest payable, 50. Increase in income tax payable, 100. If it is opening balance is 0, closing balance is 100. So that's why it's increase in income tax payable. And based on that, can you tell me what will be the value comes as cash? How much you paid? You paid 200. You paid income tax 200. Same way, you paid interest also 200. Let it clear. You paid interest 200. You paid income tax 200. So shall we put that as well in here? In here 200. Based on that, can you calculate profit before tax figure? Everyone, I need an answer from you. So you need to go from here to here. So can you calculate profit before tax figure? Anyone? What's the answer? Just put in a chat box. What's the answer here? Right. This 2 150. 2 150. You clear that? Make about that tricky, yeah? This is not an easy question. Okay. So if you want to calculate cash generated from operations, the answer is 1,900. If someone asks cash generated from operations, what do you do? Make it a medega. Can you do a kind of a highlighting this part? Then we call this as here. Okay, interest payable account. Okay. So this is the interest payable account, aka P&L expense you debit P&L and credit here. So P&L, debit, and credit interest payable. And interest payable increased by 50, so I put it here. So the balancing part is the cash you paid interest. And in the same way here, tax, you take P&L, that is your income tax figure, P&L here, and increase in income tax payable, you put it here. And the cash you paid is this. So these values you derive from the accounts. So here, profit before tax. The answer is 2,150. Profit before tax, the answer is 2,150. What is the question? Profit for the year, or we call profit after tax. So how do you calculate that? From this you minus income tax. From this you minus income tax. So this plus. Yeah, this is tricky question. If they won't make it really hard, they will give this type of question. I don't know, to be honest with you. But I'm giving you the worst that can happen, the worst that can come for your exam. So if you know at least something, some adjustments, then you know during the exam how to do a correct or some sort of a correct approach rather than getting the some questions, answers here and there. You should be very specific. When you do something, make sure you do to get the correct answer. Clear, everyone? So please brush up your knowledge on cash flow statement. There is a definite question in paper 2, cash flows, and probably you might get some couple of questions from paper 1 asking either cash received from whatever, from disposals, depreciation, loss on disposals, something like this. So what you do is you start with profit before tax figure, and you do some adjustments here, mainly loss on disposal of assets. You add, if it is a profit, you deduct, depreciation you add. Yeah, and then you come up with the operating profit. And then you add the interest expense as well. So then you come up with the operating expenses before working capital changes. And then you do adjust inventory, what will happen, trade receivable, creditors. So if any current assets increase, it's an outflow. If it is current liability increase, it's an inflow, something like this. So you need to brush up those areas as well. And then you minus, then you come up with cash generated from operations. Again, you minus income tax paid figure and interest paid figure to come up with net cash generated. So since it is a positive figure, it's net cash generated from operating activities. This is a negative figure, net cash used in operating activities. That's how you figure out Uh, these are the workings. I'll make it big. Give me a minute. You can see. This is income tax payable account. Take screenshots even. This is interest payable. So from that, you can get a kind of a theory here. Okay, so just write it down. Income tax paid equal expense plus expense minus increase in income tax payable. Income tax paid figure is equal expense minus increase in income tax payable. Next, interest paid equal expense minus increase in interest payable. That's how you develop your logical thinking. Payable. So keep these formulas in your head. The exam is finished. All good? It we did last week. Don't worry. 18 is this one. 18 is this one. Cash generated from operations 1,500, and cash flow used in investing activities negative 500. So the answer is 1,000. And net change 200. The 1,000 become 200. That means net cash used in financing activities 800 negative. 800 negative. Right. And get one. In times of rising prices, what effect does the use of historical cost concept have on companies' assets value and profits? Rising prices. Rising prices. What will happen? So if you charge depreciation, you charge depreciation low value. Why? Because you're using historical cost concept. If your depreciation is low, your profit is what? If your depreciation is low, profit is high. Clear? Profit is high. So profit will get overstated. But what will happen? The assets. Assets are recorded as profit is overstated because you're charging less amount of depreciation. Asset value is understated because you're not showing the real picture of the assets. If you're not showing the real picture of the assets, because you're using historical cost concept, which is a violation of relevance principle or qualitative feature, qualitative characteristics of financial information, then your asset value is understated and profit is overstated. Yeah. The accounting concept. The accounting concept that provide the basis of recognition on part of cost of goods purchased during the year as cost of sales and remain year-end as stocks in line with concept is matching concept. So part of the unsold stocks you bought is considered as an asset. And sold stocks, the cost of sold stocks, we call them as cost of sales, that is considered as an expense. So expense is matched with the revenue they generated. By that, you derive gross profit. The unsold stocks is carried forward to the next financial year as inventory, and that is considered as a closing stock. That will be recorded in current assets under current assets in statement of financial position. Depreciation. The other scenarios you use the matching concept is depreciation. So what do you mean by depreciation? Depreciation is an allocation of cost of non-current assets over its useful life. So instead of taking a machine, the full value of machine as an expense, what you do is you take the entire cost and divide that cost with the useful life and charge on yearly basis. Because why? The depreciation is charged on annual basis. Yeah, the corresponding expense will be matched with the revenue that the machine or non-current assets generates. Yeah. So number 22. Theta prepares its financial statements for the year ended 30th April each year. Okay, this is a bit tricky question. 30th April. It starts from 1st May. Okay. 1st May to 30th. Company pays rent for its premises quarterly in advance. So keep an eye on that. In advance. 1st January, 1st April, 1st July, 1st October each year. So our financial year ends 30th April. So probably the latest payment was made on 1st April. Am I right? This payment from here to here, one. Okay. Annual rent was 84,000 per year up until 30th June 2005. So 84,000. 84,000 for the year. 84,000 for the year now. What is the monthly rent? So this divided by 12. 7,000. According to the previous agreement. Previous agreement. Okay. Under new agreement, it's increased to 96,000. Increased to 96,000. That means per month, here's 8,000. Make it clear there, everyone. Previous agreement, rent is 84. 1st July, the rent is 96,000. And the rent per month is 8,000. Rent per month is 8,000. Now, based on this situation, tell me how many months were covered from old agreement and how many months covered in new agreement? I need an answer from you. 30th June, 1st July. I need an answer from you all. Others? Everyone, please do think. It's a tricky one. How many months for old and how many months for new? This is started with, rent agreement was for the year up until 30th June 2005. The exact answer. Our financial year start from 1st May. Our financial year start from 1st May. Think about it. 1st May in the 30th June, how many months? 1st May in the 30th June, how many months? Anyone? 1st May, financial year ends 30th April. Okay, financial year ends 30th April. So it starts 30th June. How many months? I need you to think. First May to 30th June. 1st May 2000. 2005. 1st May 2005. 1st May 2005 and 30th April 2006. I'm asking 1st May 2005 to 30th June 2005. I'm asking very simple question. Some are still struggling. Why? 2 months. It's 2 months. Yeah. So can you tell me what is the appropriate expense for the next 2 months? So the previous 2 months, 14,000. Is it clear? 14,000. You need to take it very serious, okay? Your financial year start from 1st May 2005 to ends 30th June, 30th April 2006. That is your financial year. But your rent agreement finished. The previous one is finished on 30th June 2005. The previous can cover only 2 months in your financial statements. And the next 10 months relevant for the new agreement. So new agreement expense again 80,000. Is it clear? 80,000. So what is your expense then? Add together. 94,000 is your expense. Is it clear, everyone? 94,000 is your expense. But the problem is you have 2 answers giving 94,000. What do you do? Now you come to the prepayment part. How is the payment current? You pay on 1st April. You pay for 3 months because you're doing quarterly payments. Quarter 3 months. So 1st April, you're paying for the month of April, for the month of May, for the month of June. Your financial year ends on 30th April. So so mas dekak you pay upfront. So 8 into 2 prepayment is 16,000. That clear? Prepayment is you may pay altogether 24,000 on 1st April. 1st April pay karata, your financial year ends on 30th April. So the masikata expense and you pay another 2 months upfront. So you pay 16,000 upfront. That means your prepayment is 16,000. So the answer is fourth option. Answer is fourth option. I prefer if you can join online rather than looking at videos, lecturing subsequently. It's not going to be effective, to be honest with you. Yeah. So please ask your friends to join then and there. It's good. Next, what is the essential characteristic of an asset out of the following? Tangibility need not be. There are some intangible assets. Estimated limited useful life need not be. Land. Ability to generate future economic benefits. Will keep that as an answer for the time being, but we need to read the rest as well. Control of economic benefits derived from legal ownership. Sure. Control of economic benefit derived from legal ownership. Legal ownership is not a must. Even though you're not the real owner, still you can have the assets and you have right of use assets as per SLFR 16. Arise as a result of future transaction. Wrong. It should be past transaction. So based on that, the answer is third option. Answer is third option. Question number 24. According to LK's 8, changes from warranty provision percentage from 5 to 10 is considered as. It's about warranty provision. So it's about estimate. Why I say it's an estimate? Because it's a number. If you change a number, that is an estimate change. So if it is an estimate change, you need to adjust from the day you make the change to future. Clear? So you have two answers here. Change in accounting estimates, number 2. Number 4 also change in accounting estimates. But number 2, it says retrospective effect. What do you mean by retrospective effect? You go back to your historical thing. That means where you set your standard, your policy, and adjust from that day onwards. You go back to your previous year or whatever the date and adjust. That's called retrospective effect. What do you mean by prospective effect? Prospective means from the day you're going to make the change till the future. So based on this, any estimate change, you need to adjust for future prospective effect. The answer is fourth option. The answer is fourth option. Number 25. Ontario Limited imported a dairy machine and incurred on 1st Jan 2020. The following details are as follows. Required. What is the carrying value of machinery as at 31st December 2020, assuming depreciation rate is 10% per annum on cost? Right. It's a bit tricky one, okay? So purchase price is 1,000. Import duty 200. Freight charges 100. Installation cost 60. Engineer cost 10. Trade discounts given by the supplier 20%. That means this 1,000 is the list price. Again, adu karanna 20%, that is 200. So the answer is 800. This price is gonna bear, remember. This price is 1,000. Again, adu karanna discount 200. That is your correct value. And here, different thing, new thing. Government grant. If government want to give some incentives, they want to promote this industry or business, so they will give some grants. So in that case, any cost need to be deducted with that grant. So what is the cost based on that? Answer is 1,070. That is your cost. Okay. The question is what? Question is carrying value. What do you mean by carrying value? Cost minus accumulated depreciation. So you need to calculate the depreciation. Depreciation for the year, 10%. So what is the carrying amount? This is 963. Option number 3. Please do amend in this question, number of shares should be 100,000. Can you do amend that one? Question number 26. Right. 27 AKD. Please do amend. It's not be a question. Okay? Sorry for this. Make a main karagana number of shares issued is 100,000. It's not 10,000. It should be 100,000. Okay. The first question: gross profit ratio. How we calculate GP? GP divided by sales. Times 100. Stock turnover. What do you do? Stock turnover. Cost of sales divided by average stocks. Cost of sales divided by average stocks. Right. Gross profit. Do you have any other information to calculate gross profit? It's not given. But they have given what? They have given profit. That is net profit. Net profit after tax. Net profit after tax is given. How much? 600,000. 600,000 is given. Okay. My question: how do you calculate net profit before tax? Any guess? Any guess? How do you calculate net profit before tax? Net profit before tax equal, yes, you add back the tax. Clear? But there is no tax. How you calculate tax? Yes, very good. What you do is just make a note. Net profit after tax divide by 1 minus tax rate. 600,000 divide by 1 minus 0.4. 1 minus 600,000 divided by 0.6. The answer is 1 million. The net profit before tax sector 1 million. Is it clear? And it further mentioned no other income has been generated. No other income has been generated. So then, if you want to calculate the gross profit, what do you do? This is the net profit after tax, probably before tax. Add karanna operational expenses. Then you get the gross profit. 2 million is the answer. Gross profit take 2 million. Sales key 5 million. So GP 40%. GP is 40%. Okay. GP is 40%. Next one, stock turnover. Stock turnover is cost of sales. Okay, sales kiyada 5 million. Gross profit kiyada 2 million. So how we calculate cost of sales? 5 million minus gross profit, that is 2 million. Answer is 3 million. What is the average stocks? It's given 600,000. In terms of million, it is 0.6. 3 divided by the answer is first option. Next one, earnings per share. This can be tested this time. Earnings per share, profit after tax minus preference dividends. Divide by number of order shares. Dividends you have profit after tax how much? 600,000. And number of shares, hold on a second. Number of shares is 100,000. So the answer is 6. Answer is 6. EPS, dividends, divide by number of order shares. Dividends is how much? 150,000, 100,000. So answer is based on that, answer is the first option. Okay. Question number 29. Which of the following journal entries may be accepted as being correct according to their narratives? So in that case, we do is you debit building and credit whatever the cash you paid as wages. So if you incur any sort of expenses, but that need to be capitalized from the wages, you need to transfer that to the relevant non-current assets. Okay, so this should be the other way around. This is wrong. You calculate tax rate to the net profit of tax. Oh, no, that's wrong. Tax rate is applicable based on the profit before tax, and you apply the tax rate, not profit after tax. Okay. Directors' personal accounts, directors' remuneration. So directors' bonus transfer to their accounts, that's wrong. This is not the case here. It's wrong. Suspense debit, sales account credit, correction of error pertaining to credit sales account 10,000 understated. If the sales is understated, sales credit, suspense debit. The answer is third one. Is third option. C only. Which of the following items can appear in statement of changes in equity as per LKS 1? Share issue, yes. Dividend paid, yes. Preferred dividend proposed, wrong. Net profit, yes. Surplus on revaluation reserve, yes. Restatement of prior adjustment increase, counting errors. Yes. So except for fifth one. This. Okay, everyone? Right. List components on elements of financial statements separate. What are the components? Profit or loss and other comprehensive income. Statement of other comprehensive income. Statement of changes in equity. And statement of financial position. And cash flow statement and accounting policies and notes. Elements, assets, liabilities, and equity. And income. Okay. Space do we need to include? Remove this. Reference dividend pay growth, profit after tax. What do you mean by earnings per share? Earnings per share you calculate only for ordinary shareholders. Earnings attributable to ordinary shareholders need to be divided by number of ordinary shares. The preference dividends tick both you need to remove, you need to deduct that from profit after tax. Okay. Right, next one. Record the source document to follow the following transaction of hardware company. Sale of motor vehicle on credit to motor vehicle dealer shop. What's the answer? That is the answer for 31, 36. Second question, number 1. Got the answer. What's the answer? Your answer is general journal. You're wrong. You're not reading your question well. The answer is general journal. You're wrong. You think that if you hammer the paper, but you're not hammered the paper. They're asking what? They're asking source document. So if they're asking source document and if you write the primentary book, 0 marks, remember, you should be very, very careful. I don't know why you are take that one is very carelessly. Please be vigilant and figure out what is the question they're asking. You feel that this is very easy question and you jump and write it, but the answer is totally wrong. Please be mindful when you are coming up with the answer for the easy question. I know it's easy, but you need to write the source document. Is it a sales invoice or general voucher? Some are saying sales invoice, Someone saying journal voucher. Which one is correct? Sale of motor vehicle on credit. This is a hardware company. This is a hardware company. Very tricky, okay? You need to learn these things, okay? Don't blindly figure out the answer. You're selling for dealership. That doesn't matter. So whom you're selling is not relevant. Bad debts recovered. What's the answer? I'm really sorry for this. There's a connection issue. Yep. Bad debts recovered. Your answer? What's the supporting document? Receipt. The answer is receipt. Okay. Cancellation of discount allowed. Journal voucher. Journal voucher. Okay. First one is journal voucher. Second one is receipt. Third one is journal voucher. Fourth one, sales return. Return in words. Credit note. Return in words. Credit note. Okay. Okay. Please give more prominence or emphasis on question number 33. Can be tested this time. I'm expecting something like this. Okay. So here, the question is item by item basis. This can be tested. Huh? So milk powder. You have Nespresso, you have Anchor. The cost is given, NRV is given, and units. So this is next one is lower. The cost is 300, 350. NRV 320, 325. The lower one is 300, lower one is 325. Yes, it's lower. Yeah, it is lower. Yeah. So now what do you do? You multiply. So what do you do? You take the cost here and lower of another. Lower. Okay. So cost का calculate करें हम units into cost. Take the total. And the lower one, what do you do? Units into the corresponding lower item. Units into corresponding lower item. Yeah. Item by item basis. Item by item basis. Milk powder. Okay, and then come to the other one. So you take L. 20, 25, Navi, 15. Okay. Lower is 20. Sorry, 15. Lower is 20. Number of units, 1,000. First. The total value, as per item by item basis, the total value is okay. Item by item basis, total value is. We come to the second one. Come to the second one. Right. We'll do like this. So 3,000 in, sorry, 300 into kind of a group basis. Okay, group basis. The milk powder is a one category, one basis, and soap is another group. So 300 into 100 and 350 into 320 into 100, 325 into now you take the total of this. Here it is 320 plus 325 into, take the total. Now which one is the lower? This one is the lower. This is called group method basis. A group became a cost group became NRV take the lower one. Yeah. You take the other one. L R. So you take 20 into 1,000. 25 into next 15 into 1,000. Sorry, 30 into what do you do? 20,000. Add together 70,000. 15,000. 70,000. You go for this one. Lower total for that group. So what is the corresponding inventory value? Correct inventory value under group basis is item by item එකේ ආවේ 160,000. හරිද? මේක අහන්න පුළුවන්. Can be tested. Highly probable area. Blue basis out දෙන්නේ 167. Yeah. Okay. I'll make it big order also. Get the screen. Yeah. Number 34. A club bar inventory as at 1st April 2020 costs 3,750. That is the opening stocks. 3,750. Cash received from customers is 28,340. It further mentioned the barman's wages of 50 per week. So wages 50 per week. 50 per week. So how many weeks per year? 52. So is 52 into 50. That is the wages. Paid from cash till receipts. 52 weeks per year, and the bar purchases during the year is 21 to 200 purchases. 21,200. Our prices are fixed so as to achieve uniform gross margin of 40%. So first we calculate the sales. Sales is cash you collected, that is 28,340 plus, because you pay barman salary 50 per week from the till, from the cash collection, and then you deposit that money in the bank. Clear? So then, how you calculate the total sales value? This plus 2,600, that is your total sales value. 28,340 plus 2,600. ඒක තමයි sales value එක. ඒකේ තියෙන gross margin එක කීයද? So write it down, gross profit. 40% of that figure. 40% of that figure. So how we calculate the net profit? Wages unit. It is 2,600. Net profit. This is your net. Next one. List two similarities and dissimilarities between right issue and script issue. Script issue, another name, bonus issue, another name, capitalization of reserves. All are same. Script issue කියලා කියන්නේ bonus issue or capitalization of reserves. Okay. So similarities. Number one, both increases what? Stated capital. Can be tested, this one. Both increases stated capital. Both are issued. shareholders. Issue to existing shareholders. Dissimilarities in right issue. Cash is received. You will receive cash. And in bonus, no cash is received. Shares are issued as shares are issued at free. Okay. Next. Right issue, equity will increase. Will increase in right issue. It is remain constant. It remain constant. Okay. Next. Number 36. Say the impact of the following will affect in the understatement of closing stock by 200,000 for the year 2019. The 19 wala understatement of closing stock. 2020 wala overstatement of closing stocks. Because of that reason, impact on the values. The first one, GP 2020. GP 2020 valadi 2019 one will get set it off. There is no change in here, but that will happen. Overstatement of closing stock 300,000. So the gross profit will overstate by 300,000. Gross profit in G 2020 will overstated by 300,000. Equity as at end of 2019. As at end of 2019, closing stock 2019 is understated. So understated by 200,000. Understated by 200,000. Next, equity as at 31st December 2020. As at 31st December 2020. Then what happened? Same as GP, overstated by 300,000. Next, cost of sales 2019. So in 2019, closing stocks understated. If closing stock understated, profit also understated. If profit is understated, cost of sales is overstated by 200. Okay. Number 36. Details of items in financial statement of Neha Traders is given below, are given below. Assets 1.1. Asking question. Okay. Number 34 screenshot you need. Okay. 1 minute. Assets 1,100. Always use rupees 1,000. Save your time. Next, liabilities 200. Profit 200. Yeah. So it should be 1,100. And here, the cash withdrawn by the Neha is 50. Drawings. Cash. And unaccounted goods withdrawn by Neha, invoice value during the year 120,000. So they take that invoice value. So you take the invoiced value, the drawings. Altogether, the total drawings are 170. The stocks with an invoice value of 100,000 has not been sent to the customer included in assets. Stocks with an invoice value of 100,000 has not sent to the customer included in the asset above. That means they have sold this item. Okay. So they have sold these items. So that has not been sent to the customer. So that is included in the assets here. So assets value you normally recorded at cost. So then what you need to do is you take invoice value is this. Yeah. So 100,000. Invoice value is 100,000. Says Neha Trades maintain 20% margin when invoicing the customers. It's a weird figure, isn't it? So you take 20 over 120. Can you take that value here? 100,000 into 20 divided by 120. The answer is this figure. So you need to remove that one from this because this is an invoice value. Because these assets are included this inventory value, but it should be included at the cost normally. Clear? So you record that as a cost. So what you need to do is you remove the cost of that item. So the cost is this minus. We'll remove this one, that is 8,000, 83,000 figure. 83.33 you need to remove from the assets. Shall we take this out? This is the corresponding assets. This is the liabilities, and these are the closing net assets. So please write this down. Closing net assets equal this is the closing net assets. So what do you do? So profit is equal, the profit is equal closing net assets minus X. X means opening net assets plus drawings. Drawings is 170. This is your equation. There's no additional capital here. What do you do here? You take this X into this side, X 816.67 plus 170 minus 120. That is your answer. 816.67 plus 170 Answer is 866.67 is the opening assets. Okay. Question number 38. Let's do a slight amendment here. A fully depreciated, sorry, this one. Mahela's one. Making a loss of, please do amend, 3,100, 3.1 million. Please do amend, 3.1 million. 3.1 million. Right. Question number 38. Fully depreciated machinery with a cost of 500,000 has been exchanged. Exchange value is 200,000. So what do you mean by fully depreciated machinery? Cost take a 500,000 now. What is the accumulated depreciation? 500,000. So the carrying amount is 0. So carrying amount is 0 value worth of asset. You're selling for, or you are exchange for 200,000. So what's your profit? Profit is 200,000. Profit is 200,000. So what is the effect on exchange on net profit? The profit will increase by 200,000. Clear? With the new machinery cost of 800,000 on 1st July 2011. Entity depreciate all the machinery 20% on straight line basis. The financial year ends 31st December each year. What is the effect on exchange on net profits and carrying value of assets as at 31st December 2011? So from 1st July to 31st December, 6 months. So the cost of the asset is 800,000. Cost of the asset is 800,000. You multiply it with that 20%. Multiplied by 6/12. That is 80,000. What is the carrying amount? Carrying amount is 800 minus 80. Answer is 720. Carrying value of the assets will increase by 720,000. Carrying value of the asset is increased by 720,000. Anyone who has done question number 39 or some approach, it's a very tricky one. Mahela Limited sold a motor vehicle on 31st December 2020 for 1 million. How much you sold for? 1 million, 1,000. After making a loss of, please do a minute, it should be 3,100. 3,100. The loss is 3,100. Okay. Tell me, what is your carrying value? Anyone? What is your carrying value? Any guess? How we calculate carrying value? Price you sold plus loss. That is your carrying value, 4,200. Okay. Now the question they're asking is purchase price. And what is the depreciation policy? Depreciation policy is reducing balance method. Okay. If the cost is 100, assume the cost is 100, what is the depreciation for the first 6 months? Sorry, yeah. Mistake, yeah. The cost, if the cost is 100, what is the depreciation for the first 6 months? What's the answer? Your financial year, 31st December. You bought this on 1st July and you sold this on 31st December 2011. Yeah. So you need to do first 6 months depreciation. So it is 20% into 6/12. So can you calculate the value here? 100 into 20% is 10%. Okay, so that is 10. Depreciation is 10. So what is the carrying amount? Net book value? 90. Net book value is 90. Is it clear? Cost is 100. You calculate depreciation for the first 6 months, 10. Then net book value is 90. Second year, whole depreciation, 20%. What is the depreciation? 18. Depreciation is 18. So what is our net book value? Please do a minute. This is perfectly all right. So it should be 2,600. Make it 2,600. Please do a min as it is. You take as it is 2,600. So loss is 2,600. You sold for 1,000. Carrying value is 3,600. So the maker equal when is 72 volt. So what is the cost? If you want to calculate cost, what you do is 3,600 divided by 0.7. 5,000 is the cost. Just prepared, can be tested sometimes. Okay, it's a kind of a backward calculation. You need to develop some understanding on this. Question number 40 and 41. So this one, extracted trial balance. This can be tested for your bank reconciliation and as well. Yeah. So here, what you do is, in your exam, what you can do is you take trade receivable, trade debtors, trade creditors, rent, bank. You just take the figures 10, 30, 8, 10. What you do here is you put based on the information, you just plus and minus. That's how you do. Okay. So first one, when the bank statement of the month of December was received, it was discovered the following items have not been entered in the cash. So you need to enter them. First one, payment to supplier by direct debit. So if you pay to the supplier, you need to minus this one. Minus 10. Clear? Amount received from customer through direct remittances. Trade receivable minus 5. Next, rent paid by standing order 12. So the rent value will increase plus 12. Customer check returned and dishonored. So then what will happen? Plus 4 and bank minus 4. Do bank separately. Payment directly, direct debit minus 10. Amount received from direct customer, that is plus 5. And rent paid minus 12. And customer check returned minus 4. Is it clear, everyone? Shall we figure out the trade receivable balance? Trade debtors 10 minus 5 plus 4 answers 11. Trade creditor 30 minus 20 answers 20. 30 minus 10, answer is 20. Rent, 20. Bank. 10 minus 10, 0. Negative 4, negative 12, negative 16, plus 1, negative 11. That is a bank balance, adjusted cash book balance. Adjusted cash book balance. Now they're asking in 41, bank statement balance. Write it down, bank rec, balance as per adjusted cash book, negative 11, plus unpresented checks. How much was the unpresented checks? 6,000, that is 6, less unrealized deposit. Unrealized deposit is 10. So bank statement balance negative 15. So overdraft balance. You might get this type of question for partnership. They might not ask direct question. They might ask indirect question for partnership. Okay, please keep an eye on those things. Very, very important. Okay. Right. Here. So you have Amal, Kamal, Vimal. So you put A, K, and W. Yeah, opening capital account and closing capital accounts are given. So you put 300, 200, and 0. This type of question can be tested highly probable 1, 350, 225, 25. So what is the increase? 50, 25, 25, and 25. Is that a part clear? You clear? Definite question can come from this. Okay. Okay, now tell me A's capital balance increased by 50 and K's capital balance increased by 25. So what is the total? So that means this capital is contributed by W. 75 is contributed by W. Okay. This is capital accounts. So how the capital accounts can be changed? Due to one reason. One is adjustment for goodwill. Why adjustment for goodwill? If someone comes into the partnership, you need to value your goodwill and you need to pass the credit entry to the existing partners and debit entry to the new partners. Is it clear? So based on this conclusion, I would say 75 is contributed by W. So what is the W's profit share? W's profit share is 1/4. That means this 75 is equal to 1/4. So what is the full value then? The full value, that is a full goodwill equal 75 times 4. Answer is 300. Answer is 300. Here, answer is 300. Okay. So what's the new PSR? The new PSR, how we calculate the new PSR? Existing PSR is 2/3. 2/3 and 1/3. Yeah? 2/3 and 1/3. That is your existing PSR. That is Amal and Kamal. And Vimal is enter for the profit share of 1/4. So what is the remaining profit share? What you do is this 2/3 multiplied by the remaining portion without the new one, that is 3/4. Can you calculate that one? What's the answer? 3/2 times 3/4. Okay, so the answer is, leave it. We'll move to the other one as well. 1/3 times 3/4. So 2/4, 1/4, sorry. 2/4. And the other guys is taking 1/4. So this is the new profit sharing ratio. Is it clear? This is the old and this is the new. The goodwill okay, what I do is I'll do this. A, K, W. What is the opening capital? Opening capital is 300. Closing opening capital for K is 200. Okay, now goodwill is 300. So goodwill should be shared among the old partners in the ratio of 2:1. එතකොට 200 add වෙනවා 100 මෙයාට add වෙනවා. ඒක හරියද? You add these together. මේ දෙන්නට මෙයාට 2 යනවා මෙයාට 1 යනවා. Because 300 is the goodwill. ඒ 300 වලින් 2/3 යනවා Aට. 300 වලින් 1/3 යනවා Kට. හරිද? So new partners කවුද? All three. So what is the profit sharing ratio? 300 divided by 475. Ek a debit වෙනවා. I put it debit in the form of a negative. 75 into 2. This is 75. And this is 75. හරිද? ඒක ආවම පස්සේ තමයි you will get the closing balance. So we'll calculate the closing balance then. Closing balance මෙයාට එනවා negative 75. Now මෙයාගේ closing balance එක කීයද? Positive 25. So මෙයා කීයක් සල්ලි ගේන්න ඕනේද? මෙතන goodwill adjustment එක හින්දා negative 75 තමයි එන්නේ. But their balance is 25. So how much money he should bring then? He need to bring 100. Yeah, it's a bit tricky, okay? But there are a lot of MCQs and short answer questions pertaining to that. Please do practice this type of question. Unfortunately, it's a bit hard. Okay? Next one, question number 40. You might get a couple of questions, I would say, from this paper. Okay? Need not be the amounts, but the logic, the approach. Questions. Loan received 250,000, 12% per annum on 1st January 2012 has been recorded as cash sales in the books. Loan received has been taken as sales. Not yet tested, can be tested, okay? If the financial year ends on 31st March 2012, drafted net profit is 110,000. You are required to state the double entry for correction and calculate correct net profit. Okay. Simple into reverse the sales. So debit sales, credit loan. Is the amount. It's clear, everyone? It's straightforward. Sales එක debit කරා, loan එකට credit කරා, 250,000. And now you recognize the loan. So if you need to recognize the loan, if you recognize the loan, you need to provide what? Interest expense. Credit, accrued interest. Credit accrued interest. So 250,000 into 0.12 masa kiyada, January to March. So basically it is 0.03 months. Okay. So correction of profits. Draft is 110,000. Reversal of sales minus 250,000. And interest you need to account at 4 minus 7,000. What's the revised profit? And then 47,500. It's a loss basically. Revised loss. Okay. Yes. Please stay because I'm discussing the most important adjustments. First one that is more crucial for your company accounting is learn. Okay. Number 45. Calculate the carrying value of right-of asset as at 31st March 2021 to be recorded in statement of financial position of the company. So the carrying value of the assets. Right? Which one? 100,000. Sorry for this. Okay. Right. We move into the most important one. Leases. Okay. Leases, there are two things. You need to recognize the asset. And you need to recognize the corresponding liability. Okay, recognize the asset and recognize the corresponding liability. So what is the value of the asset? So please write it down. Is equal down payment plus direct cost plus initial measurement of lease liability. So, the value of the asset is equal down payment plus direct cost plus initial measurement of lease liability. You will get definite question for company accounting, this one. Definite question. Down payment, direct cost plus initial measurement of lease liability. How to recognize the corresponding liability? Present value of minimum lease payment. Just write it down. Present value of minimum lease payments. Present value of minimum lease payments. It's given. Most of the time, that will be provided by your examiner. Okay, right. Now, first part, value of the asset. So as per the question, it says initial measurement, IM, how much? 3,790 initial measurement. Down payment, how much? 1,000. Direct cost, how much? Add all together, that is the cost of the asset. Answer is 5,000. That is the cost of the asset. It is straightforward thing. That is the cost of the asset. Next, if you have a long-term asset, what you're supposed to do? You need to depreciate. Right. See, at the end of the lease period, lessee has to return the machine to LOLC, that for the lessor. So if any case, it's mentioned the lessee has to return the goods or return the items, then you need to divide this by cost by lease term. Lease term means 5 years. So this 5 million divided by lease term, the answer is 1,000. So what is the carrying amount? 4,000. The answer is 4,000. Carrying amount is 4,000. Clear? '46. Calculate the current and non-current portion of the lease creditor. This will come for sure. Write it down. Closing lease creditor. Closing LC equal opening LC plus interest minus installment. Let's copy this down. Closing LC, closing lease creditor equal opening lease creditor plus interest divide minus installment. So shall we do? Opening lease creditor how much? Initial measurement 3,790. Ticket add කරන්න first year interest එක කීයද 379. නඩු කරන්න installment එක 3,790 plus 379 minus 1,000. Now what do? You need to divide. You need to divide this into two sections. Minute. Two sections, current, non-current. Current and non-current. Current and non-current. Okay, how we calculate the current? Next year installment minus next year interest. Next year installment minus next year's interest. That is a current portion. Next, non-current, what you do is closing lease liability minus current portion. Okay. That's the answer for next time. If the drafted net profit before tax is 6,050,000, they're asking corrected net profit. What do? You do two adjustments. You do adjustments pertaining to its here. Total amount paid, down payment, direct cost, and installment has been recorded as machinery repair that need to be reversed. Repair, open bracket. They paid down payment 1,000. Direct cost 210 and installment. Okay. So how much is the value that need to be added? 2,210. It's the reversal of repair. And then you need to minus what? Depreciation. Depreciation is how much? 2,000. Then you need to minus interest on. The interest is 379. Corrected net profit. Six, eight, eight. Okay, everyone. Everyone clear on that? I purposely take this one for the next class because I want to teach you. There's a less number of students, so I want to teach this one. And the final class, the next class is so crucial. I'll be discussing SLFRS 15 and how to approach the company accounting sum and how to approach the partnership sum. So the next class is my final class. So please ask your friends to join. So this is so important. I'll be discussing important adjustment pertaining to companies, and I will focus some adjustments that may have been in your paper from my experience. So please inform your friends and try to ask them to join. Next class is the crucial class. That is my final class. And after that, the management accounting areas will be handled by Ali in next year. So please do brush up your knowledge on the questions that I did today. The paper I gave you is a bit hard, I know, but I want you to highlight. These are the things that your examiner can test in case if she want make it really, really hard. So please practice and learn, and see you on next Monday at center. Stay safe and God bless you.